Hey, what's up, beginning investors? It's me, your host, Luke, and I'm here to talk to you about something that's really cool about the real estate market. Many of you have been very interested in investing in the real estate market, but you have come to realize that it can be very expensive. You also realize that it can be very lucrative, but maybe right now you just don't have the finances to support investing in the real estate market. What if I told you there is a way that you can do it on the stock market? Well, there is, and it is called a real estate investment trust. Let me give you the technical definition of a real estate investment trust. A real estate investment trust is a company that owns, operates, or finances income-generating real estate and sells shares to raise capital to do so. So these real estate investment trusts were created by law in the 1960s to give normal people or investors with not as much money an opportunity to invest in the real estate market. I think that was a good law. I think that was something that was very helpful to a lot of people. Now, let me explain to you a little bit how these work. They are kind of like a mutual fund where you're pooling money together, right? And then these companies, once the money is pooled together, then they go out and they buy the real estate. And once they buy the real estate, then they share the dividends or their profits with their shareholders. One of the rules is 90% of the profit that they make has to go back to the shareholders. And I'll get to those rules later on. Now, these REITs, as I stated before, they are like stocks. They trade on the market just like a stock does. So, for example, I will give you an example of one real estate investment trust that I'm familiar with that I don't study, I don't follow because I don't own it. But it is called Income Realty, and the ticker symbol is O. I know that they are roughly around $52 a share, maybe $55, somewhere between $50 and $55 a share right now. Didn't look it up before the video because I just wanted to bring you this video. And they offer a 26 cents dividend per month. So most of the times you're getting a dividend, you'll find a dividend that will pay you quarterly, but some of these actually pay you monthly. And if you buy enough over the years, it could be a decent amount of passive income. You may not get rich off of it, but it's a decent amount of passive income. One of the things to point out about these real estate investment trusts is they don't, because of what they do and how they do, they distribute so much of their profits. They don't really, increase a lot in their market capitalization over time. They will some, but not all the time. And involved in some of these REITs, you'll get sometimes commercial properties. You'll get like malls. You'll get like, there's one for like outdoor malls. You get all these properties within this REIT. Now, what qualifies a REIT? This is the part that's very important to you because this is how you get paid. Because even though you don't make a whole lot, if you buy enough shares, you can make some decent passive income. But this is what I'm about to go over is how you're going to get paid and what's required by these REITs in order to become a REIT. And one of them, like I said before, is the 90% rule. All right. So let me break that down on what's required to be considered a REIT. Okay. So what qualifies as a REIT? First of all, it has to invest at least 75% of total assets in real estate, cash, or U.S. Treasuries. Derive at least 75% of gross income from rent, interest on mortgages that finance real estate or real estate sales. Pay a minimum of 90% of their taxable income to their shareholders through dividends. That was the part that I was talking about that I think you're going to like, because now you're guaranteed that you're going to get 90% of that money sent back to you as a shareholder. Now, of course, not right back to you, but all the people that are involved in the shares. Okay. You have to be a taxable corporation. You have to be managed by a board of directors or trustees. You have to have a minimum of 100 shareholders, and have no more than 50% of its shares held by 5 or fewer individuals. And if I didn't say it, you see it on the screen. Be a taxable corporation. Okay. So listen, that's my video on real estate investment trust. I hope that if you want to get involved in real estate, you'll see this as an opportunity to maybe passively get involved until you can get your finances to a point to where you can actively get involved in real estate. Listen, beginning investors, thank you for watching, and I hope you tune in to my next video. Thank you.